Welcome to tradingwithzach.com trade alert video. As you know, my site will be going live in a few weeks time. However, in the meantime, I'm going to issue a trade alert just so that you can get a feel for the type of trading that we're going to be doing and the type of returns you can expect. So, without further ado, let's get straight into the charts. I'm looking at the chart of GDX, which is the ETF which tracks the 15 largest gold miners that trade on the American markets. So the daily chart here, we can see GDX made a low in December, where it was around $18.60, and it's ramped up since basically the beginning of the year, and it's ramped up around 35-36% or so. It's now going sideways. Now, on my daily chart, and in fact on all my charts, I have three moving averages, as you will know. The 200 moving average in red, which is this line here, the 20 moving average in blue, and the 50 moving average in yellow. So here we can see we are consolidating in a sideways manner, more or less above the moving averages. We're sort of chopping above and below the 200 moving averages, but we are moving in a nice tight band in the very, very upper ranges of this move higher. Now, as you will know, I always look at two time frames. I must have two time frames in front of me at the same time to identify trade setup. So on the right hand side, I have a daily chart. Each candle, on the right hand side I have, beg your pardon, I have a weekly chart. It's very, very important to have the weekly chart along with the daily chart on the screen at the same time. So you can see each candle here is showing exactly the same price action as what we see on the left on the daily. However, it's consolidated into weekly candles. So looking here, we can see the low that was made at the end of December. GDX has ramped up around 36% or so. And we have already said that we are going sideways in a nice tight band of consolidation. Now, what really is the icing on the cake for this trade setup is the fact that we are now clearly above all three moving averages. We're above the 50 moving average, we're above the 20 moving average, and we are above the 200 moving average. And by the way, you will notice that the moving averages on the weekly chart appear at completely different levels to the daily chart. That's because the moving averages measure the average closing price of the prior 200, 50, or 20 candles, and of course on a weekly chart the closing candle price will be different to that of the closing price on the daily chart on the left. Hence, the moving averages are at completely different levels. However, of course, the weekly chart is more powerful. It is the more dominant time frame, and therefore we need an extra sort of edge to our trade, and that's why I always look at weekly charts. So notwithstanding the fact that we've said we're going sideways on the daily chart, we now have to look at the weekly chart, and we can see this is fantastic. We are above all of the moving averages, and we are moving again in this nice tight band of consolidation sideways, and we're literally bouncing above that 50 moving average. This to me tells me that GDX will be going higher. Now, looking at the chart, I would estimate that GDX from here could go up about 10 or 15%, perhaps higher, but initially I'm looking for perhaps a 10% move in the stock. As you know, the trades I take are through the use of options. So, although I can see GDX should be rising 10% or so at the very least, for me to make a meaningful gain, or for anybody to make a meaningful gain from a 10% move, they would have to have a significant amount of capital. Now, the beauty of trading options is that you don't need vast amounts of capital. You can make spectacular returns, even in monetary terms, in dollars, with a relatively small account. Let me just give you a quick example. So if I put my cursor here, you can see GDX is around $25. Let's say it's $25. If GDX is going to rise 10%, as you can see in the top left corner, if one had $10,000 in this stock, that would rise 10% and give profit of $1,000. So you're risking potentially $10,000 if the trade goes wrong, just to make a $1,000 gain. So the risk reward isn't so great, but not only that, to make just $1,000 on a trade like this with a $10,000 position, it requires a lot of capital if one wants to make meaningful gains. Now let me show you the power of options. I like to give my options time. So in other words, when I buy an option, I'm buying an option that's at least a couple of months ahead. As you know, today's 20th of February. I'm looking now at the April expiry here, and the current position of GDX we know is around $25, give or take. So I'm going to look at the April expiry, and I'm going to look at the $25 strike price. Now, buying the April 25 strike will give me the option to buy GDX at any point between now and the April option expiry. It will give me the option, not the obligation, but the option to buy GDX at a price of $25. Now, as you would have seen on all the literature I've been putting out and the videos I've been putting out, I don't actually exercise options. My strategy is just to buy the option for whatever it's worth, or for whatever I can get it for. In this case, it's around $1.40. You can see the bid price is $1.38. The ask is $1.40. My intention is to buy it at this price, and when GDX rises 10% or so, as I forecast it will be doing over the next month or so, I will then go and sell my options. Now, we know the option at present, the 25 strike with the April expiry, is, as we've said, $1.40. This is my options pricer here. We can calculate what these options will be worth if GDX rises 10%. So 10% from this level here will be approximately, let's say, $28, give or take. So if I forecast that GDX can get to $28, I'm also able to calculate what those options will be worth. Now, the formula to calculate what an option will be worth when you come to close a trade is as follows. You take the target price, which is $28, and you subtract it from the strike, which we've said is $25, which gives us a price of $3. And that means that if GDX gets up here to $28, the options that we've now bought for $1.40 will be worth $3. And you can see immediately the power of options. For a 10% move in an underlying stock, we are going to, well, practically double our money, actually more than double our money. Now, what is the risk in taking options? If we can get a spectacular return of 100% in a month or so, surely the risks are greater, and they are. The risk with option is that if you are wrong and GDX starts going down, if by the time the option expires in April, GDX is below $25, our option will decay in value to 0, and we could lose 100%. Now, whenever we hear of options losing 100% potentially, it scares everybody away. However, that is the beauty of it, in that our risk is defined. We know that if it goes wrong, we will lose 100%. Therefore, we only put in what we are potentially willing to lose, and that takes the stress out of trading. I'll be doing another video shortly on options, and we'll go into great detail as to the benefits and the beauty of trading options, and why that can actually keep us in the game and allow us to make consistent and sometimes spectacular profits, as you've seen in my other videos, with, in my opinion, what is limited risk. So, in other words, we can make 100% or more if GDX gets up to $28, which is not a tall order in itself, and we're risking 100%. So if it goes wrong, we could lose the whole amount that we've put into it. So therefore, we're going to be sensible. We're not going to put a large amount into this trade, but we'll put an amount that if it goes wrong and we do lose up to 100%, that it's not going to rock the boat, and our trading account will still be intact. I normally recommend not putting more than 10 or 15%, perhaps 20% absolute tops if it's a very, very good setup. I recommend absolutely no more than 10 to 15, absolutely no more than 20% in any one position, particularly if your account is small. So, I'm already in this trade. I actually bought other options on another gold mining ETF. I bought options on a GDXJ, but I don't want to complicate things. I just want you to know that today, 20th of February, although the markets are closed today, one could, at the open, buy the April 25 strike for a price of approximately $1.40. And what I want you to do in a few weeks' time is come back to GDX, and I want you to see if it actually rose towards $28 as I'm forecasting it's doing. And also something I want you to take away from this is that you can see all of my analysis is purely on looking at the charts. I'm not looking at the news, I'm not reading the newspapers, I'm not looking at company accounts. I'm literally following what the chart is telling me to do. Obviously that sounds a somewhat a profound way of trading the markets, and a lot of people don't believe it at first. Indeed, I didn't believe it at first when I first learned technical analysis. I didn't believe how reliable it could be, but I've now been trading for 6 years, and this is how I profit from the markets consistently. So what I want you to take away is the fact that we're going to be trading options, and the fact that if GDX rises 10%, we will potentially double our money, if not make a little bit more. So what I want you to do is over the next few weeks, over the next month or so, I want you to come back and look at the chart of GDX, and I want you to just keep on top of things, just to keep an eye on it, to see if what Zach said, to see if what I said actually managed to bear fruit. On that note, I'll leave you to it. As I said, the website tradingwithzach.com will be going live in a few weeks' time, and this is just a sort of taster, a trade alert, just so that you can get a feel for the type of trading I'm doing. Jump onto the site tradingwithzach.com, enter your email address so that I can keep in touch with you and let you know when we are going to be live. I hope you join the site, and I look forward to showing you how to profit from the markets. See you all soon. Thanks for joining me.